In this presentation, we will continue on with our corporation comprehensive problem, entering the fourth and final journal entry of our four-step closing process. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So far, we have entered the prior three journal entries of our four-step closing process. We've closed out the revenue to the income summary account. We closed out the expenses to the income summary account, leaving within income summary net income. And then we closed out the income summary, having net income in it, to retained earnings. So we can see we're really close to our end goal, our end objective, that being to have all temporary accounts zero, and just be left with the permanent or balance sheet accounts. We've done that for all income statement accounts, and we've done that for the income summary, the really temporary or clearing account. The only temporary account we have not yet done that for, not an income statement account, is the balance sheet account or the dividends account. So dividends, kind of a strange account because it is temporary, but not on the income statement in that way. And why is that? Because the dividends represent what has been given back to the owners. So it's not an expense, doesn't represent performance within the company, but it represents a decrease in what is owed to the owners in a sense. Remember that the equity represents what is owed to the owner. You can think of it, if you're the standpoint of the company itself, similar to a liability. It represents something that the company owes to somebody. Liabilities, a third party. The equity, the owners. And the dividends represents what has been paid back to the owners. So it doesn't deal with performance, it's been paid back to the owners, and therefore it's going to decrease total equity, or in the case of a stockholder, the retained earnings. In the case of a corporation, the retained earnings. If it was a sole proprietorship or partnership, we would be calling the dividends would be similar to an account called draws that we would have. Okay, so now we're going to close this out, and the journal entry is pretty straightforward. We know that dividends is a temporary account. We can see that it has a debit balance by the fact that it does not have brackets around it. We need to make it to go to zero, so we're going to do the opposite thing to it, which in this case will be a credit. So we're going to credit the dividends, and then we got to debit something, and this is the one account that doesn't deal with the income summary. We don't have to deal with that going in and out of the income summary account. We can just put it right to where we wanted to put it the entire time, in this case to retained earnings. So there's retained earnings, there's the debit. If we post this, and again I'll do this to the outer column first so we can see the activity, we're going to say that the dividends is going to go down to zero, and then the other side is going to be the retained earnings, which, the retained earnings, which had 7,100. We're bringing it down by 1,500 to 5,600. Now again, I'm going to pull this into the inner column here. The reason we put it outside here is just because this number, the retained earnings, now has a couple things that will be included in it. Two accounts were closed out to it. So when we pull it into one column here, it's going to this number then now, as we do now, and this number now represents two journal entries. This 5,600 is made from the journal entry 3 and then journal entry 4. So that's making up this number. So we can see that a couple of these, the income summary, remember, is being made up of this number, and this number, bringing it back down to zero. But that zero is representing three journal entries that are happening here. So just keep that in mind. So then this 5,600 represents our ending goal, that the number that would be on the statement of stockholders' equity for retained earnings, or on the balance sheet for retained earnings. So we're at our end goal now, that being that all temporary accounts are zero, all income statement accounts, the income summary, and now the dividends account are now zero. That means we're at a post-closing trial balance, one that only has basically balance sheet accounts in it. And so here's going to be our balance sheet accounts, and all other accounts will be closed out to zero. This number then now we can tie out to the statement of owner's equity, or statement of stockholders' equity, and the balance sheet, and we're ready to move forward now, which means that we can now count forward in the next month the revenue and expense accounts. Revenue and expense accounts are now ready to start at zero, just like a stopwatch starting at zero, and count upwards with activity for the next time period. For more accounting information and accounting courses, visit our website at accountinginstruction.info.